Hey there, welcome to District Talk. This week we have a guest with us that I've known for a long time. It's it's been a long time, and we don't need to do that math in our heads, but it's been a long
Middle
time.
school was involved. That's all you need.
Yeah, exactly. And this week we have Realtor John Tobery.
Well, thanks for having me, Chad. I appreciate being here.
Yeah, of course. Thank you. Thank you. So, look, so this week I thought we would talk about some of the myths that home buyers believe, especially with you. You're a realtor. You see them when they're first getting started, right? So you probably deal with a lot of misconceptions or misunderstandings from the get, and you kind of have to walk them through the process and walk them through what they may not understand.
Yeah, and I think those misunderstandings come from a lot of different places. Sometimes the national story of real estate, while it's accurate information, real estate is as local as anything can possibly be. If we can talk about the DMV as a region, we can talk about the Washington Metro, we can talk about specific zip codes, and the story might change.
Yeah.
Right. And I think that's where sometimes people get lost in, they see a story, whether they're looking on their phone, they're watching the news, whatever it is, and they see something and they believe that applies here. And our market is also as unique as a home market can be
It
compared
is.
to, other regions of the country, right?
Right, right. Exactly. So the DMV area, that's the DC, Maryland, Virginia area that we're talking about. We've been pretty fortunate in a sense that, we haven't been affected as much as what some other markets have been. In fact, I think we were just looking at a report recently that shows that home values are still expected to go up, increase.
Right.
So in 2024, whereas a lot of upwards of 5%, if I'm not mistaken.
Yeah,
So
4.5 to 5%.
so we still have a lot of activity here. So we're still in a little bit of a seller's market.
There's a couple of reasons for that too, Chad. If we're gonna, kind of throw those things out there, we might as well kind of cover them as we hit them, right?
Sure.
So one thing I would say is the reason it's still a seller's market is that at this point in time, there's still not enough inventory for the amount of buyers that exist, or at least are going to come to market.
Mm-hmm.
And, that's a simple Econ 101 conversation.
Right.
You don't have to have a lot of experience to understand
Supply and demand.
Right. If supply doesn't meet demand, then prices will at least hold steady, if not go up. And that's where we're at. And one thing to touch on that I think everyone that at least is local and does understand the area we live in is we have all the federal government jobs. We have a ton of military bases. There's a ton of contractors that go along with those that are civilians technically, but are still working with those two entities. And then there's the data centers, there's the Amazons, there's the whatever else you can think of that are really solid jobs that really aren't going to go anywhere.
Right.
So it also leads to us, there's never going to be the same amount of foreclosures here that might occur in another part of the country also.
Yeah.
So,
yeah. Yeah.
And that's just a general DMV rule.
Yeah. Yeah, we are pretty fortunate in a sense that we're in a little bit of a bubble. Even during the downturn of 2008, granted we had our issues. Don't get me wrong. I'm not trying to say,
Right.
but we weren't Florida. We weren't Nevada, Phoenix. Some of those places that really got hit hard during that time frame. So, but okay, so let's kind of get into what we were talking about earlier as far as the myths. So before, just FYI, before we started this podcast, John, you came in with a client issue that we were discussing, and it's sort of what led us to our topic today, which is myths of home buying. So myths of what is happening in real estate today. And your particular client came in and was concerned about.
So they were originally looking to rent, and then we talked about some things, and they decided to at least look at the possibility of buying. And as we're going through getting them pre-approved and seeing a couple homes, just kind of see what's out there, that kind of thing, I discovered that they have found the interest rate to be the most important detail. And while it is hugely important, no one's pretending that isn't the case.
Right. Sure.
That you also have to take in other things, or you have to take other things into account, right? It can't be the singular focus of
Right.
your purchase.
Right.
So that's what we started our conversation was talking about. What does it look like at what an interest rate would be today for them, and what would it look like in a year if they were to buy the same exact house? If somehow that house was to be on the market a year from now instead of right now.
Right. So myth number one, then, the cost of waiting to buy.
Yeah.
So what we determined today was we were going to take a look at the cost of waiting to buy. We know in our market, at least, that home values are expected to grow about 5% next year or this year in 2024. So what we did was we did a practice example where we did a chart for our client where we showed him today's rates, and this particular client is a veteran, so he's looking at a VA loan. And so we showed him today's rates, which we're looking at it somewhere around the 6.125. And if he waited to buy, which he thinks rates are coming down, which a lot of us think, so that's, he's right there.
Right.
But he's thinking that he's going to wait for rates to come down.
Not to interrupt you in that, but we also want to make clear right now, if you're waiting for rates to drop back into the twos or threes, you might die before
That's
that
true.
occurs.
That's true.
Because neither one of us expects to ever see that again in our lifetimes.
No.
It just happened. That was a very...
We need another
right,
pandemic.
Right?
Yeah.
I mean, I'd rather pay at a higher interest rate than go through COVID again, just me personally. But, I think that's also a misconception that's out there, that interest rate will be seen again when
Yeah.
the 40-year average is something like 7.2 to 7.4.
Yeah.
Right?
Yeah.
So we're still technically below, or at least now again.
We're still below a 30-year average for interest rates, which, granted, I mean, okay, so there was a point where interest rates were in the 20s, right? We're probably not going to see that. If we did, we would be,
Well, this is where we're being honest and not giving you. There's a book out there called "Lies, Damn Lies, and Statistics."
Yeah.
So statistics don't always tell. Numbers don't really always tell the full story.
Right.
Even though we kind of pretend they do, but it is just to give you the idea that there can be extremes or anomalies, but you have to throw those out the window.
Yeah. Yeah.
That's how statistics work. So the 2 and 3 was an anomaly,
Yeah.
right? We're not going to see that most likely.
Yeah.
Right now, I can't.
It's going to be tough. It's going to be tough to see it again. I mean,
Right.
will rates be affected by recessions? Will we see other, possible wars during our lifetime? Things of that nature. That's always a possibility. That'll bring rates down for the most part. But something like a pandemic, that's going to be that I mean, knock on wood,
Right.
knock on wood. I don't know that we'll see that again. So yeah,
Well,
but
that was a 100-year thing.
it was
The
right.
last one was 1917 or 18 or
exactly.
whatever it was, right?
Exactly.
So
yeah.
we're talking about a 100-year thing.
Yeah.
Let's hopefully that's the last one for our lifetime at least, right?
Yes.
Maybe the grandkids will see them.
Well, let's circle back to the cost of waiting to buy. So we have our buyer, and we have a chart here that we're going to post, at least for our folks that are watching us. So we have our client. He's looking at a home. It's $460,000, right? And you can see here that his interest rate, he's a VA buyer, is 6.125. And the 6.125 rate is today's rate. and that's putting him at a payment somewhere around right around $3,200. So $3,216, right? So that's his payment today, and our client thinks that, oh well, you know what? I'm gonna wait for rates to drop, and maybe they're expected to drop. Don't get us wrong; they are expected to drop next or this year. So let's say they drop to about 5.5%, right? But what our client isn't thinking about is that difference in sale price, right? Because we are looking at rising sale prices in our market.
Yeah, that's certainly the expectation.
Right. So, what John and I did was an example where if our buyer was to wait and prices increased 5%, where would his estimated monthly payment end up at? Right.
From
And
now, if interest rates lower or is somewhere in the fives or five and a
right.
half, right? And the exact same house was on the market,
Right.
we're assuming that if that's true, it would go from 460,000 to somewhere around 485.
That's correct. Yes.
Right.
Yep.
So at that point, where does that leave the monthly payment? Yes, the interest rate was lower, but the sales price was higher.
Right. So, and that leaves us with a $50 difference in payment.
$50.
$50. So, cost of waiting to buy, $50 a month. Yeah.
8 cups of Starbucks.
Yeah. Yeah. And in the meantime, our clients who are renters, right?
Currently.
They have basically thrown money away on renting. They're not getting that money back.
There's some argument about that, but yeah, that's how you got to look at it. You're paying for somebody else's investment at that point, right?
Right. You've lost out on the equity that you could have gained.
Right.
So there's money there that you left on the table.
Yep.
Right. Because you can always refinance, and that's so cliche. And I know, trust me, I get it. But the bottom line is, you can always refinance, especially with a VA loan, FHA loan. You have your streamlined refi options that really cost next to nothing. So that being said, the cost of waiting to buy, you have your home price, you have the difference in payment, which is pretty minimal.
Right. Well, $50 at the end of the day.
At the end of the day,
should not be making a difference as to whether you can buy this house.
Right.
I would just to kind of frame that while we're giving you the example and showing you in real time that we're talking about $50 difference in payment. That would be if you wait, right? Because the price is going to go up. Most likely in our market, the price is going to go up. That's just how it's going to work here. So waiting, what does that really provide you other than, in this case, not only would they have not bought, they'd not have their own investment. They also, if they're paying roughly $3,000 a month in rental, that's $36,000.
Right.
That, say I'm renting from Chad, went to Chad.
Yes.
Well, I'd rather put that in my back pocket.
Right.
I don't want to give Chad $36,000, so he can have that in equity in the home. I'd rather put that towards my own investment. So I think that's the thing. And with the other part of that would be is in this cliche, perfect.
It is, but it's true. You hear that a lot from loan officers, from realtors, from pretty much anybody that's in the real estate industry.
You've heard the term, date the rate, marry the house, right?
We've all,
I've even seen some realtors go online so they could get clicks and attack that cliche, right?
We made a video about that.
Yeah, absolutely.
We did.
Good for them. They bucked the trend and attacked other people in the industry to prove how cool they are or how much knowledge they have.
Well,
but it's a simple conversation. You cannot believe the cliche, but you can change the interest rate on your house. You could never change what you paid for it.
Very true.
It's that simple.
Yeah.
So believe the cliche or not, but the second part of what I said is factually not going to change. I'll never be able to change what I paid for the house. but I can change the interest rate. So you have to consider those things when you're deciding. Now, I'm also a strong believer, Chad, and I know you've heard me say this before, is the right time to buy is when it's the right time for you,
True.
right? So there's other things too you need to weigh, whether that's your family situation, your job situation. Do you think you're going to be in the area for a while? Do you think you're going to move next year for a job change? Okay, then that all weighs in. But the simple fact of I can change the rate, I can never change what I paid for it. That's just factually true. There's no argument to that.
Right. Right. So let's dive into the second myth that we were talking about earlier, which kind of involves me, I guess.
Hey. Everything involves both of us. That's
true. Yeah. But again, this is something that your same client was having an issue with, right?
Mm-hmm.
And that's all lenders are the same, right?
Yeah.
So from a realtor perspective, are all lenders the same?
Well, I mean, absolutely not. And for lots of reasons, some good, some bad, some indifferent, right? But maybe the best example I can use is when my friend over here was considering a job change and got into this industry. He called me and a couple other friends that were in the real estate business, and he was considering taking on a job with a big bank.
Absolutely, yeah.
And what did we all tell you?
Yeah, that was a big no.
Yeah,
that was a big no.
Resounding no. Yes. Because none of us want to work with a big bank, particularly, right?
Right.
What I like is being able to work with a local lender, and it's not for my advantage. It's not because I make more money. I guess it is for my advantage, but I'll tell you why. But it's not because I'll make more money. It is because I have his personal cell phone. I can get a hold of him anytime I need, and I can get answers for my client. And the difference in that service level compared to some national brand that can put all the commercials on during the Super Bowl or whatever else it is because they got a lot of money.
Right.
The service is never, ever going to be the same from that bigger national brand.
Yeah. So thank you, John. I appreciate that. I dodged a pretty big bullet, I think, with that decision joining district.
No, all that did was prove he is a smart man because he contacted other people to go, hey,
right.
I'm looking at doing this.
Right.
What's your advice?
Right. So that, and just like you said, kind of going into the point of you have my cell phone number. I am available. Right. I'm not an online lender that's only available basically until 4 or 5 o'clock. Right. I take calls after 5 p.m. I take calls on the weekend.
And the reason he's bringing up 4 and 5 o'clock or calls on the weekend is, when do we show you houses? It's after you get off work.
Right.
So, while I might be working during the normal work day that people, the 9 to 5, right? Yeah, I'm doing stuff. But when I'm out showing houses is in the evenings and on the weekends. Mm-hmm. So when am I going to write the offer? Oh, wait, that's in the evenings and on the weekends. And that's when I need him to update the pre-approval letter. That's when I need him to run some different numbers so my client can understand this, that, whatever, the conversation might be with that particular property.
Right.
But that's when we need the lender to get involved.
Yeah.
Right.
So, okay. So we're available. We're accessible. We also have quite a bit more options for loan programs, right, than what maybe an online lender or a local bank may offer.
Right. And that, the local or national bank conversation, to me at least, and you're the lender, so I'm only going to step into this lane so far. but what I see it as, and what I see as an advantage for my clients, are that when I send them to somebody like you, who is technically what's called a mortgage broker,
right,
is he can look at multiple programs and find the best option for that buyer, right, or for that client.
Yeah. So, John, that's exactly right. So, with a mortgage broker, somebody like us and District Home Loans specifically, We have 27 different wholesalers that we work with. That's quite a bit. So there are going to be options for folks that are credit challenged. We have down payment assistance programs out there that might not be something that your local bank may offer. Um, and then on top of that, we get into a lot of fun stuff like fix and flips and hard money and a lot of those kind of programs and products that, investors like.
That's a
So
whole nother podcast there talking about
that
that.
is a whole other podcast, and we'll get into that, I'm sure, down the line at some
Another day,
point
right?
on another day. Yeah, exactly. So your local lenders, they're going to have more options. They're going to be more accessible. Uh, Anything else from a realtor perspective that you like about a local lender versus an online lender or a bank?
Another one that is hugely important is they're going to give you an estimate at the beginning of closing costs and those kind of things, right? Or even
Mm-hmm.
once you identified a property, more importantly, okay, I want to buy 123 Main Street. And what happens, or a lot of the times that I see, is the local lender who is used to working in the DMV in this case, right? And whatever zip code it may be, whatever 22030, right? They're going to find the correct taxes out of the gate. Where the national lender, who has no idea where 22030 is, Fairfax, by the way, is, they have no idea where Fairfax even is, much
Right.
less what the taxes are. So they're going to give you a much more general cost estimate. And sometimes,
That's if they give you the cost estimate.
right, that's very true. They'll even give
That's
you a
if they
cost
give you a
estimate.
cost estimate.
But if when they do, they miss, or they just use a general number, right?
Mm-hmm.
And so I've seen it happen for clients mine and friends of mine in the industry, where they expected to need, let's say, 15,000 at the closing table, and 3-4 days before closing, the lender reaches out and lets them know, oh, we didn't quite get your taxes right, by the way. That's now going to, that 15,000 you thought is now going to be 18.5, because they missed by $3,500 on the taxes,
Yeah.
right? And while that stinks, at that point most people are in, they're just going to have to come up with 3,500. But working with somebody like Chad here, or District Home Loans, you would have just known that was the number at the get-go, right? And that
Yeah.
makes you, it just makes you, it makes it easier for you as just as human psyche,
Yes.
right? That I already knew it was 18,000, right? And when you, all of a sudden you got to pull an extra 3 grand, 4 grand out of your pocket, it just hurts, right?
Right.
Emotionally, we all look at that and go, "Oh my God," right?
Yeah.
And
Yeah.
and you want to try to avoid that. I want my clients to kind of know what they're doing through every step. The point to me is, well, I'll do a buyer consultation, and I always say in a buyer consultation, this is like a college lecture. If you remember 50% of what I said, you did great today, right? But I'm going to be there to hold your hand through each step of the process. So as we go through, I'm always saying, okay, this happened. The next steps are XYZ, right? And part of that is the lender giving you the correct information.
Yeah. Yeah. I agree there. I've seen that happen quite a few times where the uh the big bank wasn't quite right on their estimates,
Right.
and you have to go back and walk the clients through, well, here's why, it's gonna be more out of pocket for you. I've seen that often,
Right.
because they, whether it's transfer taxes or just the amount of property taxes that they need to collect up front. That's a big one, because some states, some local counties, or townships, or whatever you may have in your area, they require different taxes up front. So some may require 6 months, some may require 9 months.
Right.
I've even had some that take up to a year
Right.
of taxes up front from you. as far as property taxes go. So yeah, so it's just a matter of like looking at the folks that are here in the DMV area and saying, okay, this doesn't look right. This estimate doesn't look right, and then kind of walking them through why it doesn't look right.
Right.
Yeah, yeah.
Right.
But I've seen it happen a few times. It's happened a few times
Yeah,
for
I
sure.
mean, it definitely
Yeah.
happens, and it's not a knock on the big lender. It's just the reality is Chad's servicing an area, a region, right? We can call it the DMV, but the doesn't matter what region of the country it is. There's plenty of
Oh, sure. I do Pennsylvania. I do yeah.
but there's a big difference between doing 3, 4, 5 states and DC. Even though I'll give DC the representation without or taxation without representation, DC needs to be made a state. Just my honest opinion. But no matter how you go about it, that's a whole nother place. The reality is that that national bank is serving 50 states. I don't know how many counties that is, but
yeah.
tens
Oh yeah,
of thousands of counties.
loan officers know loan officers, and it's funny because we will, we get together, and they'll be like, "Where are you licensed at?" You kind of walk through the states that you're licensed in. They're like, "Oh yeah, we're like all 50. We're all 50,"
Yeah,
and it's like, okay,
right.
like,
I mean, I guess you can brag about that.
but what are you gonna do in Nebraska? Like what are you gonna do for a client in Nebraska that you have no clue, or wherever it may be, some rando state. But
Right, but I mean, but to use we can use the really good example just right here of the DMV. Maryland is a quote regular state. I'm not sure what you call it. Virginia and Pennsylvania are commonwealths.
oh right,
That government system works completely differently.
yeah,
Right. And so the way the taxes and all those things play out in those two states are completely different. So unless you're familiar with it, you don't know that. And
right.
so those lenders they probably don't even know. You're a lender based out in California. Do you know that Virginia is a commonwealth and how they collect
Yeah.
taxes is completely different than Maryland?
Hey, quick personal story. I bought a home way back when, and we're talking like 18, 19 years ago, in Pennsylvania. And Pennsylvania, like you said, it's a Commonwealth. We have townships. We also have school taxes.
Right.
And my lender did not catch the fact that we have school taxes. So when I'm out there looking for my house and doing all the legwork and getting, I think I'm looking for something in a certain price range. And then here, come to find out, my mortgage payment was about $300-400 more because of school taxes, and they didn't know about school taxes.
I also lived in Pennsylvania for a period of my life and know that school tax was like 1%.
Oh, it rocks you. It
Right.
rocks you. Yeah, it really does. Yeah. So that's just a quick personal story, and yeah, and it just kind of goes back to local lenders and local lenders versus your online guys and your big banks and some of the benefits to using a local lender. So, but and another big myth that we come across and talk about, big myth that I think everybody hammers, whether you're a realtor or you are a loan officer or you're just in real estate in general, is you don't need 20% down.
Yeah.
You don't have to have 20% to put down on a home.
Right. Right. And some of the advice, some of the things we're talking about today is I never want to say anything negative about your friends, your family, your dad, your mom, your uncle, your nephew, whatever it is that might be advising you, but they have certain ideas and experiences that they are looking out for your best interest. That's why I would never want to say anything negative. I trusted advisors are a huge part of my life. I'm sure Chad's life, right?
Well, maybe that's what this myth is about. Maybe we need a myth that maybe you don't have to listen to, mom, dad, Uncle
Right.
Bob,
Well,
cousin Joe.
take their advice, but take it with a grain of salt. That
Right.
I don't know what dad does. Dad's whatever, an electrician, or dad's a finance guy, right? That doesn't mean he's buying a house all the time,
Right.
right? Or
Right.
whoever your advisor is. So I can think of a perfect example that happened to me a few years ago when we were in the COVID market, where in this case that there was a family member who was advising. The last time they had bought a home was in 2016. I wasn't in real estate in 2016, but I can sure as heck tell you that the market was not the same in 2016 as it was in mid 2020 through
Oh, sure. Oh
2021,
my gosh, yes.
right?
Yeah.
And it was massively different, and they were being advised on how to make an offer based on their family members' experience in 2016.
Mm-hmm.
And it took a lot of conversation and trust building for me to finally be able to get that particular client on board to understand what that market was and how you had to make an offer to win.
Yeah.
Right. And I'm sorry, as a buyer at that point, you had to pay more than the next guy. You had to waive contingencies. You had to do things like that I may not suggest today, but at the time, that was the only way you were going to win.
Yeah.
Right. And so we see this, using that story to get to the point of the 20% down. We see these people that come in thinking that they need to do that because I have to avoid mortgage insurance, which maybe you should touch on what mortgage insurance is real quick.
Sure. Yeah. So a lot of times when you don't have 20% down, you do pay mortgage insurance. It's a monthly fee that's part of your mortgage payment. That's collected not to protect you, unfortunately. It's to protect the lender. So, when you don't have 20% down, you do pay mortgage insurance for the most part. There are a couple programs out there that you don't have to do that. But that being said, sure, there's going to be mortgage insurance. There's going to be some pricing involved that when you don't put 20% down,
Right.
that you have to pay.
Like
But
anything, there's pros and cons.
right, exactly,
Right?
exactly.
But at the same time, I need to save $100,000 is a lot more daunting than I'm going to pay an extra
Oh,
$40,
sure. Oh my
$50
gosh.
a month.
I mean, how long is it going to take you to save that 20%?
Right.
And then we're getting back to what we initially talked about, which is the cost of waiting.
Right.
So,
Yeah, oh my God.
So there we go. We've come full circle.
There you go. So yeah, I mean, so that's it. So if it takes you, let's say, 5 years to save that $100,000, what if prices went up 1 to 5% each of those 5 years?
Yeah, which they are again, they're projected to do. So
particularly in our area.
In our area, yes, every market's different,
So I think that's where what I would advise almost everyone I talk to, no matter where they're at in being ready to purchase, I will tell them to talk to a lender. And you don't have to wait a month, 6 months, a year, whatever, until it is you're ready. Talk to the lender now. Go ahead and run the numbers, get a base, and then the lender, who is the expert in that lane. That's not me, right? I'm not the expert in that lane. While I understand a lot about it, and any realtor understands a lot about it, Chad is the expert, or whatever lender you may be using. Talk to them. Go ahead and apply. They can then give you advice on many things, from the different programs that might work for you to something as simple as I think as novice finance people that most of us are, we immediately look at, we have to pay down the credit card. And that may be true. It also may be that you could pay off that car and get into a better
yeah, I mean, that's the thing. Like, that's exactly. So we meet folks that might be credit challenged, that might think that they can't buy because they have too much debt. And then you look at their debt and you're like, you have a car payment and 2 credit cards.
Yeah.
Like you're good. You're in good shape.
Right.
But a lot of folks a lot of times think that they're, like you said, they have to pay off a credit card or they have to pay off a car before they can buy a home. No, reach out to a lender, reach out to a local lender before you do any of that, because you never know what's going to affect your credit. We can take a look at your credit report and say, you know what, pay this down, pay this down, pay this down, and you're going to be in great shape. Or you're already in great shape. You don't need to worry about paying anything down. And here you don't have to worry about spending, money that maybe you saved, paying off these cards, paying off the car, paying off that kind of stuff. But yeah, so that's something certainly to consider when purchasing a home.
So this is a simple conversation to me again, where no matter what I'm going to do in life, if I can talk to somebody who has expertise in that field, I want to take that person's advice, opinion, thoughts as something I can then chew on and make the right decision for me.
Mm-hmm.
Right? It doesn't matter. We're talking about buying a home right now, but it could be anything else I'm going to do.
Sure.
Not coming up with a great example right
No, look, hey, we meet a lot of folks that are not in a position to buy,
now.
right? So, that's part of it, and that's part of the pre-approval process. Is when you reach out to a lender, and we look at your credit, we look at your financial situation. If you're with a lender, like I would hope most lenders do this for you. But if you're with a lender and they tell you, oh, you're not quite ready yet, well, hopefully they can put you on a plan to get ready, right? So hopefully they can say, you know what, you're not quite ready yet, but here's what you need to do. And a lot of us have tools. We have credit simulators that we work with, right?
Yeah.
We have budget plans that we can work out with you to save. We have all kinds of tools available to us to put you on a 6-month, a 1 year, 2 year, whatever you need to become a homeowner. We have those tools available to you. And trust me, there are so many folks that we meet that are not ready. They're not ready.
To put a bow on that, I'm sorry to interrupt you, sir, but
yeah,
like that is, I really want to put an exclamation point on that. Of as realtors, as lenders, people involved in this industry, I would say we talk to more people that actually aren't ready,
yeah,
and we help them get there, or we help them understand the big picture.
right.
I might talk to somebody, or he might talk to somebody for a year, 2 years before they actually make a transaction happen.
Yes.
Right.
Yeah.
But that's also take advantage of the expertise that you have.
It's part of the process. And the reason I think we're saying this is because a lot of times folks are embarrassed, right? Or they don't feel like they're in a position to buy. So I would encourage all of you.
They don't want to waste our time.
Or they don't want to waste time.
And that's not our time is there for your value.
Right. So we are willing. If you're willing to work with us, we're willing to work with you. Is the bottom line.
Yeah,
so
I think that's a great way to say it.
Yeah. So let's just recap the myths that we got into today in respect to home buying. What we initially talked about was the myth of the cost of waiting to buy, right?
Right.
So where interest rates right now aren't ideal for a lot of folks, which is understandable, but their thinking is that they want to wait until interest rates drop to make their purchase. And we all know what happens when interest rates drop. I think we laid that out, but what do you...
So I guess to sum that up short and sweet is chances are prices are going to go up. Estimate is 4.5% to 5%. And how much does that really save you at the end of the day? Just because unless the interest rate cuts in half, it's really not saving you that much money. We talked about the idea that you can change the interest rate. You can never change what you paid for the home to go along with that. So at the end of the day, I think in the example we showed, it was like a $50 difference in the
Right.
mortgage payment
Right.
based on what the interest rate is today, the price of that home is today, compared to you wait a year, the price of that home goes up 5%, but the interest rate goes down, and it was a $50 difference.
Not much.
At the end of the day, $50
And
is
here
not a
you
big
spent
difference
money
in
on
the grand
rent. The home values have gone up, so you've lost out on equity. And then on top of that, you're probably going to be dealing with multiple offers where you may be giving up some things like a home inspection, right? Which could cost you dearly.
Oh my
We
gosh,
didn't even
yes.
get into that, so there is a cost of waiting to buy for sure. For
And
sure.
I come from a contracting background. I would never want to advise you to waive a home inspection, although sometimes I might have to, like during the COVID buying period, because that was the only way you were going to win. At some point, winning the offer is what you have to do, and it may not be to your advantage because it is a complete seller's market,
Right.
right? So it's all in how you look at all of these things. That's where it comes down to you as an individual, you and your family, of how you want to move forward. But the best thing you can do is to talk to a guy like me and a guy like him, right? Because we can cover a lot of different subjects, and he might have certain expertise in this, and I have certain expertise in that. But at least get our expert opinions and then chew on that when you make your final decision of what's right for you and your family.
Yeah, exactly. So that leads us to then the second myth of home buying, which is lenders are all the same, right? So we talked about online lenders versus your local banks versus your local mortgage lenders.
Right.
And from a realtor perspective,
It's unquestionable from a realtor perspective what the answer is. It is a local lender. I prefer myself a broker lender like District Home Loans happens to be, because they can produce multiple options for you out of one place, right? Like anything else, I'll make it simple in this way. Do I want to do the legwork, or do I want to let him do the legwork? Well, that's simple.
that's sort of my
I don't want
job.
him to,
That's my job.
right?
To be fair, that's my job. You shouldn't have to do the legwork.
Right. I don't want to call
You have
6,
to.
7, 8 different lenders to try to figure out which one's going to give me the best option. I'm just going to call one guy, make him do the work,
Yeah.
right? Which is the point. It's similar to why you work with one realtor,
Mm-hmm.
right?
Mm-hmm.
You can call every listing agent in the world and try to set up a time with them, or you can call me. You can tell me the 5 houses you want to see, and I'll set them up, and we'll go see them in 3 hours.
Yeah.
Right. So it's the same idea of this is why you work with one person. Plus, we also get to know you. We get to know what maybe your pain points are. We get to understand you as an individual and how to best present information to you that you digest it the best, right? So there's all kinds of advantages to working with one person over 6, 7 different lenders in this case.
Right. Right. Yep. And then leading, of course, talking about lending, we'll just go ahead and jump into the third myth, which is you don't need 20% to put down on a house. You don't. And that is something that I think we're going to have to keep rehashing for quite some time because it's just generally out there.
Never going to go away.
It's not going to go away. But for our folks that are listening, you all know now.
You don't. Are you a VA? Are you a first-time home buyer? There's the reason they have these different programs, right? Why would we expect a first-time home buyer to have 20% down? You know who has 20% down? The person who just sold this house, made $100,000, and is buying the next house.
Right.
That's the easy way to have 20% down, right? As a first-time home buyer.
Yeah, most folks that I work with, if they're putting 20% down, it's because they've sold a house.
Yeah.
it's because they have sold a home. It's usually not coming from savings.
Right.
Yeah.
Right. So as a first-time home buyer, you're going to sit around and wait for 3, 4, 5 years to get that $100,000.
Right.
Right. Well, in that time, the house of the price of the home has also gone up 10, 15, 50, $100,000. Where'd you really end up? The point is to get your foot in the door, and that's why they have FHA programs or VA programs if you happen to be a veteran or active duty. Thank you for your service. But
Absolutely.
at the same time, that's why we have these different programs, because we're trying to help people get their foot in the door. And you know what? Your first home isn't going to be your dream home or your forever home, probably either. Right.
Yeah.
And there's a lot of reasons for that. I think it's moved up from, I think we used to say 5 to 7 years was how long someone owned a home. I think we're now looking at more 7 to 10.
It's about 7. Yeah, is the average. Yeah.
And that's cars have gone a similar direction where people are owning cars longer. But at the same time, very few people buy a house and live in it for 30 years.
Not only are they probably not living in their home for 30 years, but they're not going to keep that mortgage for 30 years. Rates are the rates are cyclical. So you may buy now and you may be refinancing in another year or two.
Yeah.
You may need to take money out to do, let's say you want to finish your basement or you want to do some remodeling or something like that. And you may decide to do a refi. There are a lot of reasons why you won't keep your loan, at least for the 30 years that you're thinking.
Well, and I mean, and COVID gives us another perfect example of this, actually. Right. And I just saw the statistic, and off the top of my head, it's not coming to me, but well over 50% of the current people who have a mortgage have an interest rate below 4. Right.
I saw that too.
And
yeah.
The reason for that is simple, because they were smart and they refied when it was 2 and 3%.
Yeah.
Which is another reason our housing market is experiencing low inventory.
Yeah.
Because it's hard for those people to sell right now. Whether even I have people that bought in that, and a couple military people, right? As opposed to selling the home, they moved to wherever their military service sent them next and are now renting out the home they have here because they're making money off that house. Somebody else is paying. So we're going to go full circle one more.
We are going to. That's a whole other podcast that we can get into. Yeah, right. We literally, like, the next time you're here, we can dive into that topic, because that's something that for sure we can totally talk. Yes, we can totally talk for 20 minutes about 30 minutes about why there's low inventory, about why we could keep going about myths of home buying, quite frankly.
Oh my gosh.
We don't have time to do that.
Yeah.
I would love to do that with you. I would love to keep going.
Hey, Chad, this isn't going to be our last
okay. Time. All right.
If you invite me back, I'll go.
Of course. Of course.
But yeah, I mean, but that's where you see all these things are circular and they're all connected, and all the dots aren't just little pieces over here and here. They're connected.
Yeah.
Right. And I think people need to understand that when they start the process. And that's, again, where your realtor and your lender come into play, because we can help you connect those dots, because this is what we're doing every day, where, and we'll kind of flip this around one more time, where your trusted family advisor or friend or whatever, while, again, they mean the best for you, they are looking out for your best interest. It's not what they do every day. This is what we do every day. This is what we're involved in every day.
Yeah.
And can help you connect your own dots in a better way than they can.
Absolutely. Couldn't have said it better myself.
Hey, I like that, my friend. Awesome.
Look, I really appreciate you coming by today, John, and sitting down and chatting with me.
Hey, thanks for having me. It's a pleasure. Anytime.
Yeah, and I think we're definitely going to have to do this again. And I think you already gave me a good topic that we can invite you back to discuss.
Yeah, I like that.
So that's pretty exciting. Yeah. So, so again, John, thank you for coming out today. We really appreciate it. Tell tell us again, where are you licensed?
So I am actually licensed in the DMV. I am licensed in DC, Maryland, and Virginia. I would say generally I work from Frederick, Hagerstown, Maryland, down to Fredericksburg, Virginia, and up to Bowie. And hey, I had a listing in Pasadena. That was almost
I was
from
gonna say,
Baltimore.
weren't you? I was gonna say, weren't you
Yeah,
just in
yeah.
Baltimore recently?
Well, and I went to school. I went to school at Towson, so I do
Yeah.
know the Baltimore area fairly well. Also, so I like to work the whole area, and also when we're talking about these things, understand that both of us as lender and realtor
Mm-hmm.
are working the DMV for real. So
Right.
when we talk about that, we have experience in the whole
Yeah.
space.
Yeah. All right. Well, John, thank you so much for coming out today. We really appreciate it.
Absolutely. I thanks for having me. I'll hang out with my guy Chad anytime.
Thank you so much. Hey, and listen to all of our folks out there that have been watching us or listening to us. We really appreciate it. If you have questions, if you have any kind of topics that you'd like to hear about in the coming weeks, by all means, feel free to reach out to us. Again, I'm Chad with District Home Loans and with District Talk. We appreciate you coming out. And John, cheers.
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 See you next time.
We'll see you next week.